What is a modified endowment contract, or a MEC? My name is Carmen.
And I'm Darius.
And we're the founders of Wealth Nation. If you are interested in infinite banking, or you're a banker yourself, you need to make sure that you understand what a modified endowment contract is. And we're here to explain that to you today. So if you are new to the Wealth Nation channel, we want to first and foremost just welcome you, because we teach people how to own their own lifestyle by becoming their own source of financing through the infinite banking process. So if you like our content, be sure to subscribe to our channel and also hit the notifications bell so you're notified every time we upload a video. So Darius is going to kick us off with the definition of what is a modified endowment contract.
So according to my study guide that I needed to become a life insurance agent, the modified endowment contract is as follows. Prior to 1988, individuals could place large sums of money into a cash value policy, typically in a lump sum, and the cash would grow tax deferred until the insured died, at which point a death benefit was paid income tax free. Or if they needed cash, they could take a tax-free lifetime loan or withdrawal. These policies were used in place of investment vehicles to avoid paying taxes. Under current law, if a policy is funded too quickly, it will be classified as a modified endowment contract. MEC rules impose stiff penalties to eliminate the use of life insurance as a short-term savings vehicle. And now the penalties. If the contract is a modified endowment contract, all cash value transactions are subject to taxation and penalties. Funds are subject to a 10% penalty on gains withdrawn prior to age 59 and a half. This is considered a premature distribution. Distributions made on or after 59 and a half and distributions paid out due to death or disability are not subject to penalty.
Yeah, so about that. So that was the textbook version of what is a modified endowment contract. How do we translate that? Basically what Darius is saying is that if you overfund your policy, it will become taxable.
So basically,
short and sweet.
So basically it becomes an investment where you're charged capital gains.
Exactly.
So your penalty, your cash value will be forced to take withdrawals, and those withdrawals will count as income, which is a taxable event.
Yeah, and again, exactly what Darius was saying, back in the 80s, what happens is, say you had $1 million. Instead of just putting that $1 million in the bank, they would dump it into a life insurance policy to avoid taxation.
And guaranteed income for the rest of their life.
Man, I mean...
Guaranteed interest.
I'm not mad at them. But anyways, the government got wind of it and said, this ain't happening. So the government put a lockdown on how much you can contribute towards your premium on an annual basis. Now you can pay your premium and then you can add a little bit more. But the insurance company tells you very strictly in your illustration how much you can contribute on an annual basis. And the insurance company comes up with this equation. This is nothing that your insurance agents can tell you. It's the insurance company that comes up with the number, and they'll spit it out and put it on your illustration so it's black and white. And as you see here, this is Darius's policy. They tell us right here, clear as day, that we can't add over $14,012 on an annual basis.
Or it will become a modified endowment contract, and again, that's a taxable event.
Exactly. So modified endowment contract, short, sweet, simple to the point definition is you can't overfund the policy. If you overfund the policy, then game over. The whole policy is now taxable for the life of the policy. So if you want to make sure that you avoid the taxation, just get with your insurance agent and make sure that you're playing inside the rules. I know Darius and I design our policies where if you overfund it, the insurance company sends the check back. They won't even accept it. So we have some precautionary measures set up in case you try to overfund your policy. So thank you all so much for watching and joining us today.
And make sure you like our video and subscribe to our YouTube channel, and follow us on Facebook and Instagram at wealthnation.io. And always remember, own your own lifestyle,
or someone else will.